Hello and welcome to the Texology. I am CA Priyanshu Goyal and this audio episode is part of my podcast series The Texology, which aims at imparting the information on crucial concepts of the Indian taxation scenario. If you prefer to listen in Hindi, you can watch my videos on YouTube and Instagram. You can find my profile by the name CA Priyanshu Goyal. As with other episodes in this series, this is going to be a very short clip to convey only relevant matters. Before we begin with today's content, I would just like to mention that if you feel like connecting with me, I am available on Instagram, LinkedIn and Twitter by the name CA Priyanshu Goyal. In this clip, we are going to discuss the basic law around income tax returns in the case where there is a loss. There are many questions that people usually face, like if loss has been suffered, then how to carry forward such loss, or if there is any requirement to file the income tax return at all in the case of loss. Subsection 3 of Section 139 of the Income Tax Act 1961 provides for the return of loss, wherein it has been laid out that if the person has suffered a loss in any previous year under the head profits and gains of business or profession or under the head capital gains and wants to carry forward such loss, then the return of loss should be filed in the due time. In other detailed words, Section 139(3) provides that the following losses cannot be carried forward if the return of loss has not been furnished in due time. Business loss, speculative or otherwise. Second is capital loss. And the third is loss from activity of owning and maintaining racehorses. In the case of a company or firm, it is mandatory to file a return of loss, as in the case of a company or firm, return has to be filed even if there is no income. Whereas in other cases, that is cases other than company or firm, it is not mandatory to file a return of loss as there is no taxable income. Also, Section 80 of the Income Tax Act mandates that if the return of loss is not submitted and duly assessed by the due date, losses cannot be carried forward. The interesting point here to take note of is that even if a return is submitted late, loss on account of house property can be carried forward. And also, unabsorbed depreciation can be carried forward even if the return of loss is submitted after the due date. Also, one important highlight here is that losses of current year can be set off while computing the total income, even if the return is filed after the due date. Yes, current year losses can be set off because Section 80 does not prohibit such set off. It only prohibits the carry forward of loss. So, in accordance with the provisions of Section 80, such losses cannot be carried forward. Another important point to be careful about is that assessee would be required to furnish the return of income if any other provision of income tax requires or mandates such filing. So that's all for this clip. I hope you'll find this useful, and if there's any related query or question about this, feel free to reach out to me on info@priyanshugoyal.com.